So
Yeah.
today on this interview, I'm really excited to introduce our guest, Jason DeBolt. He is a OG Tesla investor. He's been investing in them. Tesla enthusiast. He's very vocal on Twitter. I recommend you guys follow him. I can't wait to discuss his analysis and his thoughts of the company. I think we can all learn a lot from him. So yeah, Jason, what's going on, man?
Hey man, hey Jordan, happy to be here. Yeah,
Thank you.
thanks for having me on your podcast. So
Absolutely,
excited.
man. I'm really
Yeah,
excited, ask you some questions, pick your brain about everything. So yeah, just give a
sure.
background on yourself. What kind of investor are you? What do you look in companies?
Sure. Yeah, so I'm Jason DeBolt. I'm actually not a full-time investor. I actually have a job. I'm a software consultant and previously worked as a software engineer for many years with some large tech, with a large tech company. And yeah, so I work across. I have a background in cloud application development, networking, security, and DevOps. So I began investing, I guess, like in 2000. Well, probably around the 2008 financial crisis. That's when I really started to kind of invest over my earnings. But I had a basket of stocks that I was investing in, kind of a diversified portfolio, and then I had um, some investments in my Roth and 401k. And then, as I'll talk about later, I ended up investing in Tesla, and I've been heavily invested in Tesla since 2013. In fact, I've been an all-in investor since about 2013, and all-in meaning 100% of my stocks and my investments, including my retirement accounts, are allocated towards Tesla and have been for a very long time. So I can talk about that a little bit later.
Sweet, love to hear, man. So how do you describe your investment strategy and analysis? Obviously, back then, talk about how you got into it and what strategies. Like, are you doing Excel spreadsheets? You discounted cash flows and
Yeah, no. So it's funny because I learned a lot of that in college. I learned how to do discounted cash flows and some kind of financial analysis. I took a ton of accounting and finance classes in college. I didn't use any of it for investing. I just kind of went with my gut and looked at. So I guess my investment strategy is more closely aligned to the famous Peter Lynch. He's a really famous fund manager. Peter Lynch is great. Like long-term buy and hold is what I do. So I just look for opportunities, just buy up as many shares as I can over the years where the stock is artificially suppressed. And when the stock pops one day, it could be years from now, it could be 6, 7, 10 years. You don't really know when these things will happen, but there'll be a long period of kind of inactivity or maybe a lot of volatility or maybe even a decline, right? Over a long period of time, you just got to hold on. And then at some point, the stock price will reflect reality. It'll catch up, and people realize that this company, whatever you're investing in, is really valuable. So it's not about timing. It's like, if you were to buy, one example I like to use is Walmart. It's never too late. If you were to buy Walmart 10 years after it IPO'd, you would have made 50x the 10 years after that. So Walmart goes IPO. 10 years later, you buy a bunch of Walmart stock. And then 10 years after that, you would have made 50x. So you could have been 10 years late to the game and still made 50x. And then if you were to hold on another 10 years, you would have made 10x on top of that for a total of 10x times 50x is a 500x. And so it just shows you like you had 10 years to learn to find Walmart as an opportunity. Something similar I think will happen with Tesla. But even more extreme. So I think that Tesla is still way undervalued. And I think, today, I think it's worth more like $3,500 a share. That's today's value. That's not some future value. That's how I would price it intrinsically. Like if I woke up tomorrow and it was worth more than $3,500 a share, I would consider selling some, but because it would take, so that would mean it's fundamentally priced in. But I think that there's so many, you can also look at it as, a discounted cash flow model where you take future cash flows from expected revenue streams, you discount those at some interest rate, then okay, you have some way to value the company. I don't think you need to be that technical. I think like that's really nice to know, but sometimes I think simplicity is better if you understand the business really well, the fundamentals of the business. You're better off learning about batteries than you are about financial statement analysis with Tesla, right? You're
Yeah,
better off just learning,
I
like
completely agree. Like I kind of went a little overboard with my spreadsheets. I'm doing like each
yeah,
quarter and batteries and segments and countries and everything. And it's like you kind of bounce around Twitter and some people have their whole discounted cash flow in like 4 lines of Excel. Like keep it nice, simple. You can only
yeah.
predict so much and so far ahead.
Right. It's actually really seductive to think that you can model the world. It's very seductive to think that you can do that. Um, you can do that with short-term estimates sometimes. Like there are people that can do that very well, but long-term, you're better off just learning about like physics and engineering and looking at the analysis done by those that know what they're doing, like Sandy Munro, when he talks about the value of high pressure die casting or high pressure injection casting, where they're actually, traditional auto manufacturers, they assemble the chassis of the car with like lots of steel plates, and they have some conveyor belt, and they're moving parts from, they're moving pieces from one place to another, and they have spot welds, and there's like thousands of welds. They're welding together hundreds of parts that make up the chassis, and just a lot of robots are needed. But if you have these massive casting machines that Tesla is using, what they do is they create a mold, and they shoot molten, some kind of alloy that they actually design themselves. Tesla is building their own materials. They have a shared, so basically Tesla and SpaceX partner with, there's one group that is shared between both companies, and they make, it's the metallurgy, or metallurgy, I don't know how to pronounce it, but they create custom metals and alloys, and they literally created a special metal just to work with these casting machines. And that's pretty amazing. Like, I don't think any other auto manufacturers have their own metallurgy departments. And the reason why they had to create their own alloy is because after these giant chassis pieces come out of the machine, they tend to warp. And so they want to be able to heat treat them, and they want to, they tend to warp when they're heat treated to make them stronger.
Yeah.
And so what they're doing is, and they'll fold like a potato chip. So what they do is they don't want to heat treat because that, number one, it takes time, costs money, and it warps the piece. But if you create an alloy that doesn't require heat treatment, which is exactly what Tesla has done, you save a lot of time and money in the manufacturing process. So, and also it takes less than a second. It takes like milliseconds to shoot molten aluminum into a giant mold and just to drop out a big chunk of the chassis, rather than having tens of robots assemble lots of little metal plates and go through, take up a huge part of the factory floor. So these are the kinds of things where you're better off understanding manufacturing and, just like shop skills that you may have learned in like an 8th grade shop class, like just building things. If you understand how to build things and how a little bit of physics and engineering can go a long way, and much better off than being a quant and learning a bunch of financial stuff. It's actually, it can even work against you if you know too much about finance, because then you look at Tesla and you're like, they're going to go bankrupt.
They're just
if you
burning
look at
cash.
burning cash, and you start to scratch your head and like, there's no other company that behaves like this. This company is going to go bankrupt. So, having a certain amount of knowledge and applying it to Tesla can actually, financial knowledge can actually hinder your ability to like get in on a great opportunity. So
Yeah, I'm really excited that you brought that point up, because it's exactly right. People sometimes just get caught up in the financials way too much. Just talking to a few friends, oh, they're
yeah,
losing money, they're not profitable. Every analysis continues to say like Tesla's not profitable. But if you really
yeah,
boil down to what Tesla's doing, they're doing a lot of things that they've never been done before, and that's why it's so hard to price them in or value them. Like your example, the gigacasting, that's never been done before. That's a new aluminum alloy that they developed internally, instead of making all these piece parts and then welding them together. They're just doing it all in one shot. And another thing,
exactly.
like another example like that there's never been done before is like an automotive company that has this, you know, software as a service profitable margin that Tesla's now doing. So again, yeah, Tesla's a great company. Sometimes like you said, the financials can get people focus on the financials too much, and then it's like just experience the car, you know. And once you sit down, you feel the acceleration, you see the minimalist dashboard and how sleek and how awesome the car is, you know. I
Right.
think experience in the product is a huge part of it.
Definitely.
People like when I give test drives, they you can kind of see it like click in their head. You're like, oh yeah, yeah, like this is a future of the world.
I've converted skeptics to buyers. Like when I first owned my car, I owned a 2013 Model S, and I had people that didn't even want to go for the test drive. It was like, oh, just come check it out. And I let them drive it, and they're like, I want one. Or if
Yeah.
they say I want one, skeptics will usually be like, oh, so how much is this? And you just see their facial expression change. You're like whoa, and maybe I need to reevaluate my my idea of buying a Tesla. Is Yeah, it just changes people once they're in the car and they just experience how smooth it is, how well it drives, how well it handles, and it's just an experience, right? So a lot of people on Wall Street, I don't think they ever drove the car, and that's the that was their issue, is not experiencing the product.
Yeah, like I've
Yeah,
brought in my friends on test drives, and this is like a 5 minute test drive. At the end
yeah,
of it, you know, I show him the autopilot, the acceleration, and all that good stuff. And then I park the car. He goes, "How much is this car?" I was like, "Cause I got the Model 3 long range dual motor." And I was like, "Oh, starting price is $49,000." And then immediately he was like, "Dude, I fucked up." He's like, "I just bought a
yeah,
truck last week and it was $60,000." He's like, "I fucked up. I should have got something like this."
yeah.
That's the Tesla's kind of $0 marketing scheme that they're doing. It's word of mouth. You know, they don't pay for any advertising. They put their money in quality and engineering.
Yeah, it's like if the company is good enough, it can carry its own. It doesn't need any help from advertising, and yeah, it just spreads word of mouth. So
Yeah, so let's back up a little bit. Let's back up to like when you first experienced Tesla, whether it was the actual vehicle, you saw a car driving down the road. Did you buy shares first, or were you a vehicle owner first? How did that play out?
yeah, good question. I can just quickly run down the timeline. So in 2009, I went to a fair in San Mateo, California called the Maker Fair. And the Maker Fair was kind of like this super geeky fair, a geek fair where there were a lot of startups and a lot of hobbyists that were, creating robots. And there's some hobbyists that like made their own computers out of like, you know, just, it was incredible. There's a lot of really crazy geeky projects there. And Tesla had a booth. They actually had I think both a Roadster and a 2012 Model S prototype in 2009. And so I saw, I sat in the car and I was like totally blown away. And it kind of created a space in my brain for this company. It was like anytime I saw something on the news, I would read about it. And then a couple of years later, 2011, Tesla opened a sales center in Menlo Park, or maybe it was more visible. Maybe it had always been there and I didn't see it until then. But I decided to walk in, and that Tesla had the skateboard design of the car on display. Like you can see the battery pack, and it was just so simple compared to an internal combustion engine. I was like, this is the future. I mean, as far as just far fewer moving parts. There's seemingly endless cost curve reduction with batteries, and you know, like compared to an internal combustion engine, which has been around for 100 years, and they can't really make them any cheaper. You can't really innovate on top of them, and there are fundamental issues with moving parts and thermal issues. It just hoses everywhere. Like internal combustion engine is like there's no more innovation left. But with batteries and electric motors and power electronics, there's so much more optimization that could happen. And I knew that there was huge opportunities in EVs. So I decided to buy one right there. I ordered one, and then 18 months later, it's a long wait when you're waiting for a Tesla. Like you want the
Yeah.
car so bad, you know. And finally, I got a call out of nowhere from the factory. They're like, "Come pick up your car." So I drove up to Fremont and did the paperwork. The paperwork took like 5 minutes. You know, it's really easy compared to like a 4 hour session to buy a real car. It's super annoying. When you if you go to a dealership and try to buy a traditional auto, it takes hours, right? And it's really painful. They try to rip you off, and but when you buy a Tesla, it's basically a non-experience. Like it's nothing. Yeah, really easy to do. So I was able to tour the factory in a golf cart with 2 or 3 other Tesla owners, and I saw that only 10% of the factory was being used. If you looked out on the rest of the factory, it was like a big void where you couldn't even see the far side of the factory. You couldn't see the walls. Like it was totally empty, lights out. And I was like, wow, they could expand. They're going to build a lot more cars. And then I saw that the manufacturing, like they were building a lot more of the car than I thought. I thought they were just maybe assembling parts that were outsourced or imported from out of the country or China. But no, they were stamping. They had many stamping machines. They were stamping body parts out of aluminum. They had these massive dies kind of hanging on the ceiling. And it was incredible. Like I was totally blown away. So on the drive home, I ended up buying 2,500 shares at $7.50 per share, split adjusted. So,
And this is just basically based on your experience from, you know, the tour and buying a vehicle.
exactly.
That's awesome.
Yeah. So that was my initial. So that was, I think about $19,000 worth of Tesla shares. And now it's worth around, I think, $1 million or a little over $1 million. Or it was, you know, when Tesla was about $500 a share. So yeah, so that was a good initial. And I just continued buying shares for the next couple of years. Actually, the next several years, I was buying more and more shares. So.
Yeah, you hit on many different good points that I wanted to bring up, like just how fast Tesla's been progressing as a company. You know, you talk about the vertical integration, all the machines that they're doing in-house, as opposed to legacy automakers. You know, they can only go as far as their suppliers. You know, Tesla can make a design change on the fly, see how it works out, and then just continue moving along. You know,
Yeah,
Sandy Moreau touched upon this a bunch of times. You know, the revision changes on, I think it was the super manifold for the Model Y, went through 13 changes in a matter of, I think, like 6 months. He said that would literally be impossible. And that just shows how fast they're progressing as a company.
exactly. It's the speed of innovation is really the speed of changes and the tightness of the feedback loops and the coordination of people involved in different parts of the company. It's like how was the SR-71 Blackbird produced versus, say, a Boeing jet, right? Like Boeing jet is not vertically integrated, and there's engineers and suppliers from all over the world. They're sending parts, and machinists will have to modify the parts and make sure they fit and everything works. And it just takes forever to build these large passenger airplanes because of all the outsourcing. Whereas with the Blackbird, they essentially design that thing in a tent with like machinists and draft and designers sitting side by side, constant collaboration, iterating on parts and doing things. And they built the fastest airplane in the world. This thing was super amazing. And that's the model that Tesla does, is everyone is kind of collaborating very closely, very vertically integrated, just like the Blackbird. You know, everything was done in-house in Lockheed Skunk Works, versus Boeing is like the complete opposite of vertical integration. It's just tons of, you know, it's just a different model. So yeah, so that's definitely, you know, similar to Apple with the iPhone. Vertical integration is the way to go if you want to build a massive lead and competitively.
Yeah, to get, you know, feedback, if Tesla can get feedback in 2 months, you know, with a design change, what takes a legacy automaker 1 year, then, you know, Tesla can innovate 6 times as fast. And it's pretty cool to appreciate, you know, all the engineers at Fremont, they're right there. They're like right next to the pilot line, manufacturing line, and they're just innovating so fast, kind of similar to what they're doing with Cato Road for the new batteries, the tabless batteries. They're just doing a nice 10 gigawatt cell, and then they're going to just put those at every factory. on whatever country or gigafactory, or even, outsource that to legacy automakers.
Yeah, and I mean they're innovating in all areas. I mean now the batteries, the actual battery chemistries. Before they were partnering with Panasonic and other battery manufacturers to make cells, and Tesla would just assemble them into packs and write all the software for managing the power supply and everything. But now they're building actual actual cells, and they're doing it in a completely different way using established architecture where they're essentially able to so if you look at a traditional battery, you have an anode and a cathode and a separator, and you have these little tabs on opposite corners of the battery, and then all these lithium ions are kind of going the longest possible route across this rolled out battery, and it creates heat thermal issues, but with the tabless cell, the paths that the lithium ions have to cross is just like, I think it's 1/6 of the length. So that makes the battery much more performant and it doesn't have any thermal issues, or it still does, but far less than a traditional battery. So that's the innovation that probably the biggest innovation that they announced in Battery Day was these new tabless cells, and they get a lot more power and a lot more energy density. I think like 5x for the energy density and 6x for the power than over traditional cells. And so the power to weight ratio is also significantly improved. And then they're innovating, and they've always been innovating power electronics. They're starting to really kick ass on manufacturing with all this high pressure die casting that they're doing. And and also just managing, so batteries, manufacturing, metal, creating custom metal and alloys. They're innovating with things like insurance, car insurance, and solar, and it's just autonomy. I mean, there's so many.
The list goes on.
It's just ridiculous. Yeah, the list goes on. I mean, I have a list of 4 years ago or so, I wrote a document, a Google document called it's actually an ebook, but I haven't published it. It's called "Your Car is Used Only 4% of the Time." It's a 60 or 70-page document that it's kind of like my thesis on like what's going to go down in the next 2 decades with kind of the convergence of autonomy and electric vehicles. And I mentioned all the industries that are going to be disrupted. And one of it is, there's the global oil industry, traditional automakers, gas stations, car dealers, car repair shops, car rental, body shops, car maintenance, tow trucks, the personal industry, industry like personal injury attorneys is going to be disrupted, car insurance, claims adjusters, car financing, car parking. There's municipal parking and private parking that's going to be disrupted by autonomy. Taxi services and Uber, real estate is going to change. Uber rides, public transportation, the police industry. You don't need people actually giving tickets because the cars are going to be autonomous. So that's going to be interesting. And then the medical industry. So these are all going to be disrupted and or changed in a big way.
That's awesome, man. I didn't even know you were working on that. I'm excited to see that, get things published. When do you think that's going to happen, or you have any goals?
I actually wrote it for me, but I should publish it. It's funny because I read it the other day, and a lot of it was just spot on. Like I was just gathering information from different publications, and there was, I'm just reviewing it, and like a lot of the predictions actually came true. And the next, 2020 was the timeline for kind of the 2020 was the timeline for 2022 was the deadline for kind of like complete autonomous capability, and we're kind of getting there, right? We're in 2020, and we're autopilot has really improved a lot in just the last few months, and I think people often underestimate or they overestimate what's going to be done in the short term, but they underestimate what will happen in the long term. And that's so true with Tesla. Everything that they do is like underestimated and or overestimated in the short term. People are let down in the short term with Tesla, but in the long term, it just blows everyone's expectations away.
Yeah, it's all about disruption. That's where I think that's where most of, the retail investors see the value in Tesla, like all the segments that you just mentioned. And again, the list goes on, and like the mainstream media still compares them to automobile companies, and it's like these people are crazy. They're doing a lot more. They're working with the best engineers. Like there's surveys, plenty of surveys out there. They're interviewing the best engineers in the world. Where do you want to work? And it's SpaceX and Tesla. It's no question about it. And if you're getting the best talent, you're going to deliver the best product. So yeah, we kind of talked about Tesla's strategy. So let's talk about maybe some of the competitors. Who do you it's hard to ask me this question, but who do you see coming as a competitor for Tesla, whether it's a new, startup company or someone that got acquired or possibly an old legacy slow automobile company?
Yeah, I think it's just the tech companies are the only competitors. And then of course China, there are a lot of EV manufacturers in China. I see legacy is dead in the water. They It's too late for them. They're going to be they'll need to be either restructured or they have to change their business model to be able to hopefully buy Tesla powertrains, Tesla drivetrains in the future. That's really their only way they're going to be able to be competitive with EVs. To be competitive, it's all about cost curves and cost reduction. That's I mean, if they can't, and that depends on economies of scale, right? You need to be able to mass produce these things to realize the benefits of these cost curves, to be able to produce X number of batteries and battery cells to be able to drop the price. So I don't see them producing their own batteries. They're trying to partner with other battery manufacturers, but then they won't get that vertical integration that they need. And I think they definitely will not be able to compete with Tesla in any way. Not even with autonomy. It's a joke. They can't hire the same talent that Tesla can hire. Um, they're just, it's too late for them. So some of the big tech companies like you know Apple and Amazon. I don't think Google is up there personally, but those are the threats, I think.
Yeah, I definitely agree. I mean, I always get this question asked to me, and it's like I usually have trouble answering it. It's like the competition is so far
Yeah,
behind, you can't really pick, a handful of companies. It's like you have the
yeah.
legacies who are really slow, and like I kind of see what
And
GM did with Nikola, and that to me just showed like a desperate move. Like they're just trying to get into the EV segment without really trying to get
yeah,
into it. And then all the legacy like the Nissan
right.
and Chevy Bolt, it's like they're building electric vehicles, but how much, like Elon talks about designing a car from the heart. It's like they're designing cars that nobody wants. And
Yeah.
Apple did that with their iPhone release.
Mhm.
It's like they went from the phone with a traditional keyboard to touchscreen, and that's basically what Tesla did with their interior.
Yeah, it's interesting. I don't think startups are. I don't think they have a chance either. Their best bet is to be acquired by a larger, maybe one of the tech companies, but one of the big tech companies, because startups they don't have the funding that they need to kind of get past mass producing a single vehicle. It's a miracle that Tesla was able to mass produce the Model 3 or even just to produce a lot of Model S's. I feel like um, that was they just did the right thing at the right time. It's too late. No other startup I think could mass produce a car in a uh, competitive way, even for luxury. Even if they did what Tesla did, where they sell a few number of high-end cars and they work their way down to selling kind of more economy cars that are a lower price point. I don't even think that that's going to work, because even if the startup makes a really high-end nice EV, it's not going to have the same uh, the same range and performance specs that luxury Model S will have, applied Model S will have at less than half the price. It's not going to happen. You need to be able to disrupt an entrenched player or the current leader in an industry. It needs to be, you need to build a product that is so compelling, it needs to be 10x better to disrupt a major, uh, to disrupt the market leader. So this is kind of like in line with Andy Grove, his former CEO of Intel. He talks a lot about this, about strategic paradigm shifts and how to disrupt the leader in a market, you really can't just create something that's similar or as good. It needs to be like 10x better, like way better, to disrupt an industry and to dethrone, a market leader. And that's what Tesla has done. So if someone wants to disrupt Tesla, they need to build a product that is 10 times better than what Tesla has done, to be able to be players. There'll be a lot of companies making EVs, but I think Tesla will be by far number one. So
Yeah, and I just see their lead just growing. Like what they did is very, very difficult. Electric vehicle is completely different from an ICE vehicle. Like you're gonna have these legacy automobile companies, they have their factories built around these ICE engines, and even their
yeah,
engineers, they're experts in combustion and all that, gas and ratios, and it's like those resources are going to be extinct at this point. It's a completely
right,
different game.
exactly.
Let's talk about the Tesla community. That's something I definitely wanted to bring up. I mean, that's how I met you. How close the Tesla community is and how much support there is and everything like that. I mean, Elon Musk, he's interacting with all his shareholders and just Tesla vehicle owners. And it's like he doesn't care.
Yeah,
He appreciates that feedback, and that's kind of like the platform that he built. And that's definitely where I get all my news is from Twitter, usually published there, and then you see articles followed up and stuff like that. So yeah, let's talk about the Tesla community, how that's worked out.
yeah, sure. So yeah, the Tesla community is pretty big. I mean, I primarily use Twitter, so I'm in the Twitter Tesla community, but there's the Tesla Motors forums, and there's YouTube channels, a lot of great content on YouTube. There's local Tesla owners associations, and they have gatherings and kind of they'll, if you're an owner, sometimes you can join one of these local Tesla owners associations and have like a luncheon or something like that, meet other owners. There's like, I mean, and in the Tesla community, there's also people that, so there's a many different groups. There's people who are really low level and into the financials, so like quant types that are creating financial models. There's people on YouTube that are often kind of fanboys, where they talk more about kind of the big picture, larger changes that are happening in the EV industry and with batteries, and they're kind of a lot more passionate. There's also the Tesla News blogger people like Vincent from Tasmanian. There's industry veterans like the practitioners like Sandy Monroe, and there's people that are kind of funny, Whole Mars blog and K10, they're creating like, pretty funny tweets. And then fund managers like Ross Gerber, Ron Barron. Yeah, it's a vast, I mean, there's so many people in the Tesla community. Yeah, I mean, I don't think any other, maybe Apple is another company that will have some similar kind of communities, but I can't think of any other company besides Tesla and Apple that has such a wide array of like kind of fanboy groups,
So why do you think it was possible, or why do you think it happened that all these retail investors were right about Tesla as a company? Because when you see the mainstream media, they're a bunch of negative press and even analysis downgrading the stock, it's going to go bankrupt. Why was the retail investors so right about this stock? I know we brought up the part of just putting down the financials. I don't know if you think that's a big part of it, or because it's just like seems like you're on one side of the spectrum or you're on the completely other. Like they're going bankrupt or they're going to be the best company in the world. So just kind of shed light on
Yeah,
that retail investors versus the mainstream media in analysis.
I think I've heard of some people like Chamath talks about it as retail investors having almost as much information, if not more, than Wall Street. But I think it goes beyond that. I think it's more than just information. It's about retail investors are, they're buying the products. You know, they're very familiar with the products, and I mean, a lot of them are former owners or current owners. So they're deeply like they will get software updates, and they'll be able to view what's going on with these software updates. They'll be able to see they're much closer to the ground and like what's really going on with Tesla than Wall Street. So they're looking at not like data that's on the internet. They're looking at like the actual goods and services produced by Tesla. That's kind of like an information advantage that a lot of the retail investors have. And also the communities that we just talked about, communities have like a really diverse group of people. You know, it's kind of like people from all different backgrounds. There are lawyers, there's engineers, many different types of engineers. There's just people from all kinds of professions, and they are able to share kind of more insight and go into a little bit more depth in their particular field when analyzing Tesla than say Wall Street analysts. Wall Street analysts are, I mean, the analysts that are valuing Tesla are just plugging numbers into a financial model that was probably written in the 80s to evaluate Ford and GM, and they're just spitting out a number, you know, and it's just, you know, James Stevenson on Twitter talks about this, how, you know, they're just dropping numbers into templates that they set up for these old legacy auto companies, and they kick out a number and say, okay, you know, that's good enough, let's go to lunch. Like that is literally what's happening. They're just looking at these numbers, and that's how they're analyzing the company, and they just don't know what they're doing.
Yeah, it's like all these people with MBAs, you know, their full-time job is to look at stocks and look at discounted spreadsheets and stuff like that. And this is their full-time job, and they're managing millions of dollars. And that's like a big part of the reason why I wanted to start this, you know, YouTube channel and Twitter. It's like to show people, like, if you do your own research, that's the beauty of investing. You do your own research, you do your own knowledge, and then you can think for yourself. You can make decisions on yourself. Similar to how Tesla's disrupting the automobile industry, I kind of see this as like a retail investors disrupting, you know, the ways of investing that's been done for the last 30 years.
Yeah, I mean, it's like, I mean, you tell these people, do they care if Tesla has made their own application-specific integrated circuits to do matrix computations for machine learning AI? They don't care. They don't even know what that means. Like, they're just like, to them, a chip is a chip, you know, and they could just buy it from Intel or wherever. They don't understand how amazing it is to have someone like Jim Keller design a chip that is customized, like custom silicone for Tesla. I mean, that's just mind blowing. And then also they don't understand like Battery Day. You know, there's so many amazing announcements made on Battery Day. It just totally blew my mind. It actually takes like that. You have to watch it at least 2 or 3 times to fully absorb the presentation. But they announced like so many innovative things that, I mean, that to me was, Battery Day was like signaling the end of the internal combustion era. You know, that's it. Like they're done. The next couple of years, they're going to be turning out these super cheap batteries, and I mean, they reduced the cost of the batteries like 56%. You know, with all of these innovations combined.
Yeah, it doesn't matter how, you know, I mean, they obviously increase their range and performance and all that, but when it comes down to it, it's how cheap can you make a battery? How efficient can you do it? And that's what the presentation was revolved around, is that they're reducing the dollar per kilowatt hour by 56%. And a lot of people just missed the fact, like, you know, I think they got caught up in the tweet that Elon did the day before, where he was like, you know, this, to reach all these profitable margins, it's going to be until 2022, and it's only, well, he mentioned it's going to be, you know, for the Cybertruck, the Semi, and I forget the third vehicle that he said on that. But yeah, those things are going to be produced in the Model Y in Berlin next year. He kind of sandbagged the presentation, but I'm very excited. Like you said, it reiterated the conviction that you have in the company, and how they're just going to extend their lead with these other companies. You kind of talked about the margin calls on Twitter, and why you advise against them. So if you can
Yeah.
explain, what margin calls are and why you don't like them and how everything works.
Yeah, sure. So margin is a way for people to take out a loan against the value of their securities, kind of like the market value of their securities. So depending on what the stock price is that day, you can borrow a certain amount of money. So if the stock price goes down by 50% the following day, all of a sudden you're borrowing way too much than you should have. So it's basically margin is a way for you to borrow against the value of your stocks. And so if you have $100,000 in stocks, maybe you could borrow, your brokerage may allow you to borrow, say $50,000, right? And then you can just use that money to either buy more stock. It could be the same stock or a different stock, or you could use that money to do anything really. You could buy a car or remodel a house or whatever you want to do. You don't even need to buy stock with the value that you get out of that. And then you pay interest on that. So you basically will pay, 8% a year for on that $50,000 that you borrow. So you end up paying $4,000 in interest or something for that $50,000 that you borrow. The problem with margin though is that it's really unpredictable. I mean, there's a lot of risk in that. So if you're an all-in Tesla investor like me, or an all-in investor in any stock, you have to be aware that they can just change that amount that you can borrow at any time. So, and what they do is they set this thing called a margin maintenance requirement, where you have to maintain a certain level of equity. So, a certain level of true value that is in your portfolio, just factoring in the margin that you borrow. So basically, you need to be aware that they can change. And this is what happened to me. I took some margin out and I bought 1,700 more shares than what I had. So I had a total of 5,000 shares, 1,700 of which I had borrowed. So that's equivalent to 25,000 shares split adjusted, right? So I had 25,000 Tesla shares at one point, split adjusted. And what happened was the 420 tweet came. Elon Musk said that he wanted to take Tesla private at $420 a share. The stock price shot up from like $300 a share to $380 a share, like very quickly. I was doing really well with the margin because the stock price is going up. But then the stock price tanked after there was like investigation with the SEC, and there were some other tweets that Elon made, and the stock price went down below the price at which I took out the margin. And so when that happens is, if the price goes down below a certain point that's such that your maintenance requirement is no longer maintained, they can force liquidate your shares. So they can force you to sell your shares, and that's called a margin call. And they might give it a euphemism like a house call or something like that, but it's basically they're telling you, you got to sell your shares like within 24 hours, otherwise we'll do it for you. And so I had 6 margin calls over this period of about 2 months, and it was extremely painful because I was forced to sell shares at a lower price than what I paid, and I overall lost about, I think about 300 shares or more, which is split adjusted. That would be 1,500 shares that I lost. And so that was really painful. They doubled my margin maintenance requirement from like 30% to 60%. I think they thought Tesla was going to go bankrupt. So I talked to the people on the phone at my brokerage firm, and I was like pleading with them, like, no, this is just, the stock is being manipulated. The company is way undervalued, and they just would not listen to me. And I thought I was crazy. So I ended up having to sell those shares. I just had a really bad experience because it wasn't, they can just change the margin maintenance requirement anytime. And usually they do that at the worst time. They do that at the time when the stock is tanking. So those two things combined. So they can really, I have another margin story. Someone on Twitter reached out to me and said he was nervous about his margin because of something that I tweeted. And he shared screenshots of his portfolio, and it looked exactly like mine in terms of the ratios. And I said, you need to back out of the margin immediately. He did it that day. The next day was the worst day ever. And in Tesla history, it was like 20%. There's a 20% decline in one day. I think it was the worst day. And he was so thankful that he cashed out of his margin because he would have lost hundreds of thousands of dollars. I think about 300 or 400K. So like he was
Wow.
really lucky to have reached out to me. I told him to back out. I was like, get out. And then I guess his buddy didn't back out. I think his buddy actually lost everything.
Jeez. Yeah, pretty
Yeah.
wild story, man. So you said they obviously can force you to sell when the stock depreciates, the stock price goes down. Can they force to sell at a point where it's increasing too much, or can you just hold on?
Um, so you can get a house call, you get a margin call, and then while the stock is going up, you can. But if it goes up to a certain price, um, you might just want to wait until you sell so you can sell at the highest possible price. But sometimes I think they still can force you to sell. Like it's basically up to them. They can just force you to liquidate at any time.
Pretty tough, especially if you have like, long-term conviction in the company. You think it goes down, but you're not really worried about it.
Yeah, the whole margin industry is like, I think it's just a big scam to like shake out retail investors. It can be used like margin if you're very, very, very cautious about it. Like don't go anywhere near the buying power or limits that they suggest. Do something like a few percent or something like that. Or if you're retiring and you got a bunch of stock, some people what they do is they never sell their stock. They just borrow against their securities in retirement. As the prices of those securities goes up over the years, they're just building up. They're just borrowing against those. It's like taking out a loan to spend the money, right? So if you have say $10 million in Tesla stock, and you retire, age 50 or 60, you don't have to sell your Tesla stock. You can just take out a loan and spend the money that you borrow while the stock price continues to go up. So as long as the stock price goes up at a rate higher than your margin rate, which is like 8%, that could be a good strategy. And some people do that. So there are situations where a little bit of margin can work, but it's super risky. You just have to be very careful, and especially if you have a concentrated position, like in one stock, like what I had. It's way more. The maintenance requirement is much higher for somebody who has a concentrated portfolio than if you have a diversified portfolio. But again, they can force you to sell at any time. So
You talked about, how you got into Tesla as an investor a long time ago. What are your current Tesla plans? You're obviously going to be holding on for the long term, but are you adding anything now? Are you doing anything? Are you just buying and holding?
I have it super low. I don't have a lot of cash. I'm at a point where I'm kind of in this transition where I'm spending most of what I earn. So like, I'm just kind of enjoying life a little bit and I'm buying a surfboard and just like kind of spending more than I otherwise would. And at some point in the next 5-10 years, I may retire and probably either start incrementally selling a small amount of shares, or doing the margin thing where I'm just kind of keeping a long running margin. So that's kind of like what I'm thinking about. But I mean, I own close to 15,000 shares at this point, and I don't like. I'd love to add more, but it's like, how much do I need? I have to think about the most valuable resource, which is time, and that's something you can never get back. With money, that's valuable, but you can always get it back if you lose it. But time is the ultimate resource, and just to be able to retire, and you're freeing up that 40 to 60 hours a week that you would otherwise be working, and so that's what I'm thinking about. Is like, I would like to get to the point where I have 8 figures and then I can retire. And I think eight figures would be a good number for me to retire.
Hell yeah, I love to hear that. Yeah, you see it on Twitter all the time. It's like, they set a poll out. It's like, I can sell,
Yeah.
50% of my shares and do this and retire, or do I wait, 5 years? It's like you said, you can't get time back. And for the viewers, you said you're thinking about retiring within 5-10 years. So if you could just say how old you are, I think that would kind of shed light on the opportunity that Tesla is bringing to you.
Yeah, sure. So I started investing in Tesla when I was 31. I'm 38 right now. And yeah, I mean, so it took 7 years to kind of build up my portfolio. And a lot of it was built up in just like the last year. So for 5 years, I had almost zero returns. I think it might have actually been negative, but and that goes back to just, understanding the value of the company and true intrinsic value of a company rather than just being super focused on the stock price. If you just understand what a company is doing, you believe in it, and you've built your conviction, you've done a ton of research, just buy the companies that are valuable and that are not priced in, that say Wall Street doesn't understand. So I think the biggest opportunities are in companies, tech companies, like companies that are able to hire a lot of talented software engineers that are misunderstood by Wall Street, and they're attacking they're disrupting industries. So they need to be tech, they need to be disruptive, and they need to be misunderstood by the street. That's where the opportunities are, and that's exactly what happened with Tesla. Yeah, and if you don't want to find these companies yourself, you can use ARK Invest is a that's they have like an ETF where you can actually buy a basket of disruptive companies. I'd recommend to a lot of friends and family, just buy some ARK Invest shares, and you'll be all set.
Sweet, man. Yeah. Let's just kind of go back to on Battery Day, because I think that was a really important event and presentation. And how do you think that's going to change Tesla going forward, and even the possible other disruption segments that they can get into, maybe like a VTOL, or they kind of hinted at an HVAC system for homes. So, I think that kind of just even furthered Tesla's conviction. I was already, well, 100%, invested in Tesla, but now this is like a new level. Even the energy segment that's kind of still misunderlooked or underappreciated for Tesla.
So Battery Day was amazing. Like I think they just made so many announcements, and they kind of skimmed over a lot of things, to be honest. They just covered so many things that I think people didn't know even what the most important slide was until I think James Stevenson tweeted it. But it's basically they talked about, there's one slide where they said, okay, here's the range increase, and it's 54% with this new tablets, combining all the innovations, right? The cost reduction in kilowatt hours was like, the dollars per kilowatt hour cost reduction was 56%, and the investment per gigawatt hour in reduction was 69%. So that is incredible. Like if you want to learn anything from Battery Days, it's just, they massively reduced cost, and that's like a huge deal. They also announced that they just made so many announcements, like structural batteries. So they're using batteries to transfer kind of shear across the top and bottom pane of the battery pack, and that allows the car to handle really well. And also it means they can free up the rest of the structure of the car they can move the battery pack closer in, so that gives you kind of a better handling as well. So they just made lots of kind of these micro adjustments. So they're essentially they're doing their own, I think, lithium production, and apparently there's enough lithium in Nevada to be able to build batteries for the entire U.S. fleet. So of all the cars that they plan to sell, in the U.S. I mean, yeah, like breaking down Battery Day is just, I mean, there's so much that they covered. I think the best thing to do for the viewers is just to watch Battery Day. So.
Yeah, like you said earlier, it took me 2 or 3 times, and you're just picking on these little tidbits here and there.
Yeah.
And again, like the vertical integration, they bought that, I think that's 10,000 acres of land to do the lithium, and just the vertical integration. Again, they're just going to be able to cut costs cheaper and much faster. And I can't see, other automakers keeping up with them. Right. They're basically buying as many cells as they can. And Elon Musk said he's even, he's going to increase those purchases and stuff like that. And again, like you said, the breakdown, they're looking at every single part of the supply chain, basically from mining all the way to processing the chemicals, and even the distance traveled of these supplies. You get all these import tax and stuff like that. That takes time. You going to get any vehicles moving forward? You got your eyes on anything?
Yeah, I want to get either a Model Y or a Cybertruck. That's kind of what I'm what I'd like to get probably sometime next year. Um, I think Tesla's going to sell a ton of cars next year. Like it's going to be insane.
Yeah, so we talked a lot of good stuff. I think I'm ready to wrap it up. Do you have any conclusion or closing remarks that you just want to share? Anything that we didn't touch upon?
But I feel like maybe one thing I'd like to kind of like talk about as closing remarks is just like, if you want to be a successful investor, you should kind of really understand, kind of first thing you need to do is understand why it's important to invest. And then once you understand why, you need to figure out how to actually invest. And I know that sounds super dumb, like, but it's so important to understand. And I'll break it down in terms of like, you can never get wealthy by working. There's people who make a ton of money every year, but they're broke, right? Because they end up spending it all. Also in taxes, tax rates are not favorable to the income that you earn while working, but they're favorable to capital gains, right? That's one factor. But another is you can only work 8 hours a day, or some people work a little bit more, but you can't work 24 hours a day like your investments can. So when you invest, you can make money 3 times. You can make money 24 hours a day. You can make it when you're working. You can make it while you're on vacation. Your investments will be earning when you're retiring. Whereas if you make all of your income, when you retire, you really have no other source of income. So you need to invest. And then there's also this other component of compounding. So, compounding is like that's how your wealth grows. It's just, you can compound by owning a slice of a business, but you can't really compound yourself. Like you can't really have, you can't scale yourself up individually through your own labor. Even if you're using incredible leverage and tooling, you just cannot scale yourself up to be able to earn so much that you can make money. You need to own a piece of the business, and that's really how you can make it. And so once you learn that understanding that you can only become wealthy by investing, whether it's owning some stocks or owning a business, once you understand that, you should figure out like, okay, so I understand I need to own a slice of the business, then, what's next? Well, I think the most accessible way for people is to, buy stocks. And so you say, okay, what kind of stock should you buy? Should you have a diversified portfolio or should you concentrate? And for 99% of the people out there, they should probably just diversify because really most people don't have the stomach of seeing their wealth go down by 20, 30, 40% in a couple of days. They panic or they can't sleep. And, it's not for, most people cannot handle the volatility of stocks, especially if they have a concentrated position, meaning they only own 1, 2, 3, or 4 stocks. But if you have a diversified portfolio and you have hundreds of companies in an ETF, it's going to be much more stable, much easier to ignore the volatility, and the volatility would be less. So, but if you have super strong conviction, there's nothing that will like convince you to sell the stock. I mean, if you have that much conviction, then you can go ahead and concentrate a little bit, whether it's holding just a few companies or even just one, like what I did. I found myself in a situation where I was so convinced that Tesla was undervalued that I rolled over my 401k into Tesla. My Roth IRA is all on Tesla. Everything is in Tesla. And so that's, concentration can work if you are very, very knowledgeable of that, knowledgeable of the business and the company, and you have the conviction that's required to hold on to the stock when it gets really scary, when the stock tanks. So.
Yeah, you brought up a couple great points. Like you said, you really got to figure out why you want to invest in your goals, your personal goals. It's like, yeah, you can save money and put it into the bank, but at the end of the day, those banks are taking your money and investing it elsewhere. And again,
Exactly.
like you said, you can make a bunch of money, but if you don't have the principles of investing or personal finance, they're not keeping track of their expenses. You can be, living paycheck to paycheck. Like you said, the Tesla community is great. We could all learn from each other. That's why I'm so excited to have you on. I think you're kind of, like you said, like we all consider you a Tesla OG. Like I've only been investing in 2016, and you've basically seen the whole thing from scratch. And you've been even through the tough times, the bankruptcy, and you just held on to your conviction and stuff like that. Even, the whole COVID thing that happened, you see the Tesla stock market go down. And then, you have you reiterating your conviction, and that kind of just shows that you're really committed to this company. And that kind of sheds light on other investors to hold on and not get scared and really stick to the fundamentals of the company. And that's another thing that I try to tell people is like, it doesn't matter what's happening. It does somewhat externally to the company, but if something that's not directly internally to the company, it really doesn't matter. If Elon Musk says a dumb tweet and the stock price goes down 10%, I'll buy that any day of the week because it's not
Yeah.
changing anything day to day.
Mm-hmm. Exactly. Yeah, and understanding intrinsic value is really what you're after. Is intrinsic value is the real value of the company, and whereas like the stock price is not the real value of the company. That's just a magic. It's just like a fake number to me. It's just a number that doesn't reflect reality at all. It's the intrinsic value is going up every day. There's never a day where the intrinsic value, in my opinion, is of a company is less than it was the day before. It's always going up, and it's going up relatively smoothly, right? If you think about this intrinsic value, it's going up all the time, and that's really what you should be how you should be thinking about the company, or anyone should be thinking. It's just like, what is the real value of this company? And and that's how I think. I think entirely intrinsic value. I do not care about the stock price at all. So I lost $1.3 million a couple weeks ago in Tesla's worst single day drop, 20% drop. I lost 1.3 million in one day. I didn't care. It's like, if anything, I was kind of excited because I was like, I want to share this loss with people. It was like, and also I wish I had money to buy more stock that day, but I didn't have any cash around. So, yeah, I mean, the stock is going to go, you have no idea where it's going to go in the short run. Just got to ignore it. Some people recommend not looking at your brokerage account when that happens. I actually like to look at it and just take screenshots and share on Twitter, but it's like, it doesn't, I'm at a point where I can look at it and it's fine. I don't get bothered by it at all. Because I know that this company is going to really disrupt all the industries that I mentioned, and it's just going to get silly. Like there's going to be, I think Tesla could be at the same price it is now in a year, 2, 3 years from now. That could happen, right? There was a long period where Tesla moved nowhere for 5 years. That could happen again. But after that, like 6, 7, 10 years out, it'll be worth a lot more than what it is today. So, yeah.
Absolutely, man. Well, I appreciate your time, your thoughts, your analysis. Again, I look up to you as an investor. I learn from you, and I appreciate your time. And hopefully, we can do this again, man. I really appreciate it.
Sweet.
All right, thank you, man. Take care. Have a good one.